Jason Brown, stock market expert, is here to help us figure this whole market situation out. Jason, let's start with the basics. So what is market volatility?
Yeah, so the market's been super volatile lately. And when you hear those words, you're like, what does that mean sometimes? It just simply means the market's been somewhat irrational and unpredictable, which causes prices to sometimes shoot up real quick or shoot down. Just to give you an example, if you look at what happened yesterday, stock market sold off maybe over 100 points, but then by the end of the day, it was bought back up to break even. So if you were depressed in the morning, by the end of the day, you were like, wait, everything's back to normal. So that's volatility, just quick, sharp movement in prices that are somewhat unexplained.
And what kind of causes all of this to happen? What caused volatility in the market?
Primarily, it's driven by uncertainty, but that uncertainty is really fueled by news-driven events that the market didn't anticipate. So if you look about a couple weeks ago, the consumer confidence report that came out of the University of Michigan, consumer confidence dropped by 7 points. Nobody was expecting that. So people kind of get spooked and think, okay, people are going to be holding on to their money. Then the president comes on and says, you know what, we're going to enact tariffs tomorrow at midnight. And it's like, they didn't expect that.
Yeah.
So the market doesn't know how to handle that. So it's like, let's just get out of everything, which pushes prices down until we get some clarity. So that news just really can make people act irrational and run for the door.
Yeah, and you just said it. Sometimes you just got to hold on to things and see what it does and reacts. But it's funny that the market kind of doesn't do that. Right?
Well, here's the thing. The market is made up of human beings who are looking at their money and they're trying to process information quick. And then you have the rise of retail traders because everybody has Robinhood or WEBULL on their phone now. And so the retail traders primarily are ones who don't know what this means and they hit the button and they run for the door, as well as some institutional investors. But it's just so quick to hit a button, get out and panic that it can just cause mass selling and mass chaos in the market, which again is just driven by human beings.
It's so interesting to kind of discover that everything is kind of connected a little bit. Our President Trump, he says something that, investors may not like, and then, that can kind of create this chain reaction of events, people buying and selling whatever. And in turn, that kind of affects the market overall.
Yeah, it's kind of like being in the grocery store and they're just yelling out that there's a 50% discount on toilet paper. And then
Right.
everybody just beelines it to that aisle. And then someone says, just joking. And everybody puts it back.
Right.
So you're right. There's definitely this cause and effect when the president speaks, when the Federal Reserve speaks, when there's any type of news of interest rates or anything, and everyone tries to react quickly to see what they're going to do with their money.
Let's talk about how our viewers, how they can protect their portfolio from stock market volatility.
So there's a couple things that you want to remember. Number one, keep a level head and think about your investing time horizon. So if you're not a day trader, sometimes these news events that come out in one day, they don't mean anything by tomorrow and stocks have rebounded. So don't panic. Don't do anything that, doesn't fit your time frame. The other thing you want to think about is having a balanced portfolio. So you don't want to be too much into one specific stock or one specific sector, because bad news for one sector doesn't mean bad news for all sectors.
Right.
So if you have a balanced portfolio, you won't see as big of a drop in your account. And then my favorite tip is to use options. So one of my favorite things to do is use what's called put options, which is like basically buying insurance against your portfolio, where you can protect it and say, hey, I don't want to lose any more money past a certain dollar amount. And then the other thing that you could do, which is super powerful for volatility, if you know how to do it, which is called selling options against your portfolio. It basically allows you to collect what I like to call rental income against your stock or your portfolio. And the more that the market is volatile, the more rental income that you can collect. Because it's like people don't want to buy a house when they're not sure if they're going to have a job or not, but they're willing to rent. And so you can get more rent on the stocks that you do own because people don't want to commit to it just yet because of the volatility and uncertainty, which is a really cool thing.
It's all making sense. It's all making sense. But I want to talk about what's a well-balanced portfolio. What does that mean?
So when you look at the overall market, when I say the overall market, the S&P 500 is made up of 11 different sectors. So let's just say, for example, you bought Amazon, you bought Apple, you bought Microsoft. Well, you're all in the tech sector. You might just be in one sector. So if tariffs come out against China and everybody gets their parts and computer chips from China, that whole sector may drop. But there's still 11 other sectors like consumer staples. And in consumer staples, that's where you get deodorant, toothpaste, toothbrushes, milk. And so companies like Target, Walmart may be doing okay versus because that's stuff that you have to buy anyway versus the tech stock. So it's just saying, hey, out of those 11 pieces of pie that the S&P 500 is made up of, am I balanced across the 11 or 8 or more, or am I just concentrated in one sector so that when that volatility hits, I really feel it because I'm all in these one sector, which those stocks are going to behave the same.
All right, Jason, a lot to unpack there. Where can our viewers learn more about this? I know you are a new author. Congratulations.
Yeah, thanks so much. Well, they can always check out my new book, 5-Year Millionaire, but they can also check out what's called the Stock Option Starter Pack, which is on my website at thebrownreport.com. It actually talks about those calls and those put options if they want to learn more about how to protect their account or how to collect that rental income, and that's thebrownreport.com.
Perfect. Jason, thank you so much.
Thank you, Bree.
Well, after